Thanks so much for tuning into the Trade Setup. Good morning. I'm Niyat Shah, and it's a curious day of trade simply because a lot of sectoral churn is expected, and I'll tell you why during the course of the Trade Setup. First, what the U.S. markets did overnight and precious little. So a placid day, they gave up all the gains and ended marginally in the red. The futures, as we speak, are not showing too much of a gyration. So a bit of a nothing kind of a day, but yeah, from a bull's perspective, it's not an outcome that you wanted. Now you could clearly see, how do I say it, a bit of a shift in the sense that there is rotation at play. While Bitcoin dances to its own tune and it's retesting some $37,000 odd dollars, what you've seen very, very in a very proper defined way, an up move on gold, right? You're seeing gold prices really go up. I mean, back above 1900 because real yields are resuming decline or whatever the reasons may be, but gold prices are moving up. Now, for the micro trader in India, the gold finance companies therefore become a good plug and play, so to say. So do watch out for that. But essentially, in terms of asset classes, that's the point I'm trying to make. We're seeing a bit of a return of gold, and that's quite fantastic from an Indian household perspective, to be honest. So do watch out for that. A bunch of Asian markets are shut today, so I'm not quite showing you what Asia is doing. Let's just jump straight to the SGX Nifty and show you what the SGX is indicating in the session today. A bit of a dull start, and that is to be anticipated. I feel that it could be some of the commodity names that could lead this charge lower, and we'll tell you why. Now, first, the trade setup. Remember, yesterday I mentioned that I didn't think that the risk reward was in favor of, excuse me, large leverage positions. I still believe that. I still believe that large leverage positions could face some issues. Now, all the metal stock owners will face an issue today, but that notwithstanding, the market-wide large leverage positions could have an issue. Remember, for all those who thought that the banks were a one-way street, yesterday's comments from HDFC Bank on, I mean, the head honcho saying that we don't have a grip on what the near term could do tells you a story or two about what the sentiment around banks could be. And yesterday, that comment really disrupted the party in the banking space. Otherwise, the bank Nifty was holding out okay, bounced back from 32,000 very, very smartly. But yes, there was a bit of an issue. I do think the unlock trade is underway, though. Yesterday, you saw the hotel stocks, some of the others, mall operators, all of them do well. I think the valuation comfort is the only difference there. So if you're choosing an unlock trade, try and choose an unlock trade. If you're actually playing for the unlock trade, try and choose something which is bombed out on the valuation front, because that is what will hold you in good stead. Because even if it doesn't play out quite exactly as you plan, the downsides would be limited. If you, God forbid, played an unlock trade by buying a sector which is trading at highs, you were in a bit of an issue. Hypothetically, if you bought JSW Steel believing that it's an unlock trade 3 days ago at 750 odd levels, you're in for a rude surprise, right? Despite the 3% uptick yesterday. Now, we'll get to that why. First, a quick summation of what happened in trade yesterday as well. The MOE function will come up on your screen next, and the display screen. So you had the market breadth slightly in favor of the declines, which is quite interesting. 235 stocks advancing to 264 declining. And a bunch of stocks actually did really well despite that. So Finolex Cables, 13% up move there. There's a lot of rumor on the street about what could be happening between the promoters. Root Mobile had a fabulous uptake. We are going to be talking to the management next week. That had a great move. Relaxo Footwear, another 6% up. Phoenix Mills, I was speaking about mall operators doing well. Concor up another 5%. Some of the sugar names did well, by the way. And what didn't do well? Banking, Amara Raja, because of the block deal, came off. India Cements came off a little bit, but cement might actually have a decent outing today. Broking names came off. So that's the nature of the deal. SBI Cars, right? Unlock trade, but valuation comfort probably not there. The stock correcting a little bit. So that's interesting. And remember, we spoke about how the sell trade in sugar was probably a bit unwarranted and the fundamentals were still intact. So there's a bit of a bounce in sugar names in trade yesterday. So that was actually pretty heartening to see. Foreign investors, well, they buy in cash for the fourth straight day, and yesterday's session was no different. So there's some bit of buying that came in, which is actually a great thing. Now, results today, you got to watch out for BPCL dividend. I think UBS has upgraded the stock, saying that there are multiple triggers or catalysts for this one. So do watch out for BPCL in the session today. Do watch out for some of the others like Cummins, Hindustan Foods, etc. All of them V-Guard and Pfizer, all of those could be interesting to watch out for. And what are the stocks that therefore one should keep in mind? Well, do watch out for the short covering plays in trade yesterday. So everything consumer, from Asian Paints to Titan to Page Industries, saw a fair degree of short covering. And I think we saw some good numbers from Emami, TTK Prestige, and some of the others, again, consumer names. So there's a bit of a short covering play underway. I don't quite know if this can last for a bit, but certainly there is some bit of traction out there in the consumers. So I think I'll watch out for that pocket in the session today for sure. Now, metals may not be, and at least steel may not be in favor, but Godavari Power and Ispat had a very good set of numbers. So you got to watch out for that. Okay, we'll get to that. But Godavari Power and Ispat, the earnings first. Revenues at 1262 crores versus, I think, 1131 quarter on quarter. EBITDA margin 38% versus 30%. Net profit at 326 versus 160 crores. And they've done really well. I mean, they've reduced debt. The operating cash flow has really increased. The earnings per share, etc., did really well. Q4 EPS of 93 rupees. So FY21, 181 rupees EPS. So they've done really well, Godavari Power and Ispat. You might well want to watch out for this stock in the session today. You might want to watch out for AstraZeneca as well. The AstraZeneca Pharma, that is. Fairly good fundamental performance really on almost all counts. Revenues up 5%, EBITDA margin 19.2%, net profit at 27 crores versus 21 crores, up 30%. And this is QOQ, so it did really well for itself. Yesterday, I saw 2 or 3 very interesting bulk deals happen, and which is why we're getting them for you today. So do watch out for RT Surfactants. Promoter Chandrakant Gogri sold about 80,000 shares. Do watch out for Anup Engineering. HDFC MF sold about 0.87% shares. And Sandhar Technologies, which came out with a rather good set of results, I thought. Nippon India yesterday, after the results, of course, bought about 4 lakh shares at about, which is about 0.66% stake at about 240 rupees per share. So do watch out for this one as well, Sandhar in particular, because of the fact that the valuation comfort is there, the results are cheap, and one smart mutual fund, I'm presuming all mutual funds are smart, but yeah, one mutual fund has done this. So do watch out for Sandhar as well in the session today. Last but not the least, I was saying to be cautious about metals. Most of you would know, but I'm just laying it out. Credit Suisse has cut the rating from overweight to underweight. So it's a bit of a double downgrade, right? It's not an overweight to neutral. It's overweight to underweight. They are reversing the overweight on metals as they believe that the price to book relative to market is near 10-year highs. And the current surge in apparent demand is an extreme inventory cycle and not a super cycle. Now, this is pretty interesting because a lot of people were saying that this is a commodity super cycle and not because of inventory. Now, 3 days or 4 days ago, to be very fair, Dhananjay Sinha of JM Financial released a very good note and spoke about how the valuation comfort was just not there for any of the steel names, and therefore they should be removed. So it's pretty interesting that now that Credit Suisse has also done it, might bring about a bit of a reaction. 2 things you got to kind of, how do I say it, bifurcate between the ferrous and the non-ferrous side out here. Steel is the issue. They still have maintained, and they've shifted the percentage points in a metal name to Hindalco, from a steel name to Hindalco. So they are not negative on the non-ferrous side. So just keep that in mind. The Hindalcos, Nalcos of the world may not be the ones that should get dragged today. The steel counters may get dragged today. So that is part 1. You also got to keep an eye out on HCL Technologies. I think both CLS and Credit Suisse have reduced their overweight out there. So that stock might come under a bit of a corrective move today. If it does, IT is usually a defensive move. So if HCL Tech does correct a little bit, it would be on account of these 2 notes. However, I personally feel HCL Technologies valuations are just a great source of comfort. So corrections could well get bought into as well. So these are a few names, viewers, that you should keep an eye out for in the session today. Watch out for those bulk deal names. Watch out for metals in particular. And of course, watch out for OMCs, considering that they are in a strong uptrend. And BPCL has its results today, and they could well declare a dividend. So that keeps that stock, and therefore the OMC pack firmly in focus. Thanks so much for tuning into the Trade Setup. Have a great day ahead. Please stay safe. And if you're stepping out, please mask up.